Good afternoon, everyone. This is Christian with PerfectStockAlert.com. Today is Thursday, May 13th, 2010, and this is the part where I say, I told you so. Yes. Again. All right, the Dow Jones was down 113 points. Let's look at some charts. Okay, we've been bearish here. You can see where we started recommending the short strategies right here. She'd broken out of this previous high. It didn't really matter if she continued to go higher. She had to consolidate upon this previous high. So we told you didn't going to miss anything by going higher. It would pull back. We got another inverted hammer here, and we said that was it. And when this day happened, big old sell-off right there. And sure enough, boom, boom, boom. There you go. We're right. Now she's bounced back up here. You can't see it so much on this chart. It's not as big of a gap, but we'll show you another chart in a minute that just basically consolidates our bearish stance on this. And today's activity shows more weakness here. We've been telling you that this rally up here is an opportunity to be shorting and not going long. But the reason why we're looking at this chart today is I want to show you a new, well, if you've not been following us, you just started following us, it'll be new to you. A lot of you guys probably already know this. So let's just have a look at it. Basically, an item you need to be watching for. And they show it from time to time. So let me make sure I got the right stuff here. And let's go with blue. All right. Here is a shoulder. Here is a head. And you looks like you're starting to form another shoulder right there. Okay. That's a head and shoulders pattern. It would be a head and shoulders pattern. And it's very bearish for the overall markets. And you would look for it to be the peaking sign for the overall markets. And that's what we're looking at and what we're thinking is going to happen. Fundamentally, we have the same reasons to anticipate that. Today, you got unemployment data that was not anything impressive, and the markets had reason to sell off anyway, and that just kind of added to it. The only reason why the markets are even trying to fight go higher is on the hope that the economy is going to turn around and recover. But look at China; they were the first people, the first country to come out of the recession, indicated on their fundamentals at least, and they bounced substantially, and they're the first group to actually turn around and start heading lower. They've been in a confirmed downtrend now for a couple of months, so they're the first ones out, the first ones back in, and I think the same thing is happening to the U.S. So there's just no reason to think otherwise fundamentally, but technically we got to be watching this thing. There's definitely a short opportunity out here, and it's going to be a good one. So let's look at some more charts. This is a gold chart. We told you about the price of gold was going to be provided a floor right here, simply because of the currency problems we're seeing based on the debt we're seeing in other countries, and it was going to drive price of gold higher. We saw that breakout happen here. Note the breakout from this previous high, and that was your buy signal. And we told you the next level resistance was a previous high. Broke out of that, and now resistance becomes support. You can see a little inverted hammer right here, but again, there's a different. I'll go into it later, not today, but inverted hammers at the end of a run like this, we had a big move higher and then an inverted hammer. That's a major sell signal. When you've got one that forms on a breakout, it's a little bit of a different thing. I wouldn't be in a hurry to short that. So we're just going to not concern ourselves with this inverted hammer. You've got a nice move on the table already. If you want to take your stop loss limit, when we started this trade, we told you to set a tight stop just below the middle Bollinger Band line. Now, a couple days ago, we told you to raise that stop to this point. Now, if you want to just let it ride, there's potential for you to get stopped up, but you'll still have a gain. And if you don't want to, let it ride kind of thing, simply just take your stop loss limit, put it up there. If she kicks you out tomorrow, fine, you've made a nice gain. Everybody's happy, okay? You'll notice up here, uptrend on the slow stotch, really bullish there. But one of the items to note about slow stotch is when she moves up here, you're watching those downtrend points. You want to see it continuing higher, okay? You got one here, next one, next one. The problem with this right here, he's so tight, the next one's going to, the next pullback in the slow stotch is most likely going to make a lower low, and that would start the downtrend, okay? So right now you might want to go ahead and just take your gain on the gold. Just personal opinion, but it's something to think about. Okay, let's look at some more charts. This is the NASDAQ chart, 6 months. Each one of these candles being 1 day. We told you this bounce up here was another opportunity to go short. We do have a gap up here, so she could try to fight and get up there. You'll notice today's selling didn't actually totally engulf. To engulf it, you would have to have had a close that was lower than the previous day's open. That did not happen, so there is potential that the market could try to, maybe they get a piece of news or something like that and try to push higher again and fight a little bit more. That's fine. We won't really care. But at the same time, the psychology factor is that tomorrow is Friday, and anyone who buys has to be willing to, be pretty confident to buy because they had to hold over the weekend. So I'm not so sure. I wouldn't really count on that. Also, you've got still this major gap below you. That's the big item that you have to give credibility to. It's something that's a major force in this market. I heard one analyst today said that a gap of this size has happened 6 different times in the market, and every single time it has backfilled. I've already told you guys this will fill, but I mean, if you take his analysis and you say, okay, every time it's ever done it before, it has filled. What am I betting on here? Why would I go long? Just kind of stack the odds in your favor. Look at everything that's going on, study the governing dynamics of the situation, and trade based on that. That's how we do it here at perfectstockalert.com. So anyway, yes, I would be looking to continue on holding my short position, and if she goes higher, I would just simply add to it. Now, let's look at some more. This is the VIX. We've been nailing this sucker dead on since she turned around back here, and we told you to start buying. And she's now showing a nice support signal. This is that hammer we talk about. Hammers only matter to me when they show up on the pullback. So we've had a really nice move here, then major gap down. That's gap got to fill. That's a gap that's got to fill right there. Let me get the tools out so I can really draw them out for you. Basically, price has got to go back to this level. Price has got to go back to this level. You also have a couple down here, but I don't think the market is strong enough to actually break out to new highs, and that means these probably don't have to fill immediately. So I would be looking for these to fill, and because of today's hammer formation, that is a really strong signal here. And the VIX runs the opposite of the overall market. So when you're going long the VIX or anything that works like that, you're basically betting against the overall markets, and I would be doing that. I have been doing that. So yes, I would see this as an opportunity to start going short, a signal to start shorting if I was not already short, and just continue to add to that position as she moved lower. If she did, she could just as easily bounce much higher tomorrow. So I'll be watching that. And again, as I always say, when you're looking at your overall markets, go back and check your VIX. The VIX should be confirming your signals, and the overall markets today had a nice selling into the close. So if we think that's going to continue, we have to check the VIX. Does the VIX look bullish? Yes, that looks bullish. So that confirms our analysis, and we would again stay short. Okay. It's all pretty simple. If you're not a full access member, go to our website, man. It is free, 100% free at perfectstockalert.com. You can see what's in my portfolio. All we ask is that you refer a friend. Tell somebody, I don't care who it is, go check out perfectstockalert.com. The guy's a little bit cocky, he's a little bit crazy, but he's right. Dead on again and again and again. It's not really me. I take credit for it, but I tell you guys all the time, it's stacking the odds in our favor. We look at the overall situation and we say, okay, these are the fundamentals that we have, these are the technicals we have, and what do they all tell us? And when you stack them all up, you may have 1 or 2 telling you to be bullish, but you've got 27 telling you to be bearish. It's a pretty simple trade, right? That's the system we use here at perfectstockalert.com. It rocks. We make money all the time. Like if you were losing money today, we were taking it, because we were betting with the odds and you were gambling. Well, now you know. Can't beat us, you might as well join us. Okay, let's have a look at our disclaimer. This is our big bad disclaimer. The information provided here is our opinion only. Basically means whatever we say, we're not liable for. Okay, under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of investment. You are responsible for your own due diligence. That means get off your duff. To summarize, we do not provide investment advice, nor do we make any claims or promises that any you can read. Okay, again, I'd like to thank everybody for referring their friends. God bless. I'll see you tomorrow.